finish up problem 52A. Again, on pages 256 and 257 of your text. Let's go to the first transaction on March 31st. Received check for amount due from Empire Company for the sale on the 4th. Okay, if you look back to the 4th, we made a sale on account to Empire Company for $55,400. We didn't offer them a discount, and even if we did, they're not within the 10 days. We'll just say pay the full amount by the end of the month. We're at the end of the month and they've paid us. So we now have more cash. It's an asset that increased by $55,400. And our accounts receivable account from Empire Company now needs to come off the books. Let's go back to the 4th and look at it. It went on the books on the 4th as a debit for $55,400. So now it has to come off the books as a credit for $55,400. Remember, assets decrease on that credit side. Okay, remember, those are pretty easy, really, if you don't have to calculate a return or a discount or anything. Okay, the next one on the 31st, we read it in one of the earlier videos. But it says paid Fleetwood delivery service $5,600 for merchandise delivered during March to customers under shipping terms FOB destination. Okay, you guys, if we're paying shipping charges on a purchase, remember we add that to the cost of the inventory. But if we pay shipping charges on sales that we've made, that's an expense for us, right? Delivery expense is what we'll debit there. An expense account that increased by $5,600. And if we've paid them, then our cash decreased by $5,600. All right, then on April 3rd, paid Citibank $940 for service fees for handling MasterCard and American Express sales during March. You guys, when a customer uses a credit card, the store where they use the credit card ends up having to pay a fee to the credit card company or the bank associated with the credit card company for a percentage of the sale. That's why most companies would prefer you pay cash rather than with a credit card, because they end up getting hit with that fee for the credit card. Now, I'm not sure this account was listed back on page 227. You might want to add it in with the other expenses. It's a new expense account for credit card processing fees. We're going to call that credit card expense. And we'll debit it for $940. We paid those credit card fees to the bank, so cash of the business decreased by $940. It's an asset, and of course they decrease on the credit side. Okay, now on April 15th, paid $6,544 to State Sales Tax Division for taxes owed on sales. You guys, when we collect sales tax during the month from our customers, we have to send that into the state by the 15th of the next month, generally. Fairly quickly anyway. They don't want you holding their cash too long. But you guys, what we're doing there, when we send that cash in, we're paying that into the state. So you know cash of the business decreased. It's an asset. They decrease on the credit side, $65.44. But what account will we debit? Well, it won't be sales tax expense because it's not an expense for us. Remember, the customer's paying it. We just have a fiduciary responsibility or a go-between responsibility between the retail customer and the state. So the account we'll debit is the one we credited a few times earlier in the problem. It's a liability. Remember, when we collect sales tax, that creates a liability for us called sales tax payable. Then when we pay it into the state, that decreases our liability. Remember, liabilities decrease on the debit side. If we've paid it into the state, we no longer owe them. So we'll debit sales tax payable $65.44. Okay, you guys, work this problem along with me. And then I think that should help with your homework problem, problem 5-2B. Thanks a lot, and have a great day.